German ZEW data has disappointed once again and fallen way below expectations. Joining me on the line to discuss why this is and update us on the current state of the German economy is Ansgar Belke from the University of Duisburg-Essen. So Ansgar, the ZEW figure released today is 33.1. This is quite a steep drop from the previous release and continues the downtrend we've been seeing over the past few months. What do you think is contributing to this?
I think first you have to look at the Ukraine crisis. There are really some uncertainties in the economy, and also the German economy will be clearly impacted by the impacts of potential sanctions on Russia. And what you also have here is that there is some caveats about the development in China. The expansion speed is not as big as in the recent years, and China is for our automobile industry very important market. And the third point, of course, is monetary policy, which tends to lower long-term interest rates even more than before, because Draghi announced some quantitative easing. It's not driven by deflation fears. All inflation expectations have increased, and also, quite surprisingly, not by the exchange rate. The German analysts and the ZEW does not share concerns of an increase in the external value of the euro. Just on the contrary, very strong expectation that it will become weaker.
Now, considering the strong trade ties with Russia, to what extent could the escalating tension in Ukraine directly affect the German economy? And what would the damage be if Germany did impose further sanctions?
Yes, the first effect is that we will see further turmoil in emerging markets, which we have seen anyway since January this year, due to the expected US exit from its unconventional monetary policy. So this would mean that if this would be exacerbated, we would see an increase in exchange rate volatility. The second point is an increase in energy prices, which might be good for the euro area and for deflation fears. But I think that purely economically considered, the ties between the euro area and the Ukraine are not so big. The effects would be more via Russia. There have still some business cycle problems. The interest rates have been increased from 5.5 to 7.5 percentage points, and also the inflation is higher, and the investment climate goes down. You see a downward trend in the ruble. This means inflation in Russia and also foreign debt, an increase in foreign debt in terms of the ruble. This means difficulties, by the way, also for German, Austrian and French banks, and also foreign direct investors. Look at Russia. We have German FDI of 19 billion euros there, and also claims of banks amounting to 50 billion euros, so there might be some contagions.
And finally, Germany has experienced weak retail sales as well recently. Would you say the economy is struggling at all? And what are you expecting from the GDP rate released this week?
First of all, I would like to allude to the impact of the lower interest rates, maybe anticipated via the announcement of quantitative easing by Draghi on the returns for German savers. What I expect is an increase in saving efforts of German savers. This means lower consumption, and this is partly mirrored already by the weaker retail sales. The GDP development will also be impacted by the low interest rate sensitiveness of investment, because monetary policy is very much hoping on investment stimulating effects of quantitative easing announcements and weakening the euro announcements. But our investigations show that lower interest rates are not the main reason for higher investment. It's more uncertainty in politics, if this is reduced, and more investment-friendly climate, which is more important in terms of determining investment decisions. If you look at the whole year, on the GDP development in the whole year 2014, the main assumption here is that it will go to a value of realization of 2.0, but the main assumption is that domestic demand is the driving force, and we already have seen with respect to the ZEW figures that this might not be the case. So what I expect is, in terms of a quarter-to-quarter assessment, that we will be at something like 0.8 in the first quarter, but will go down slightly to 0.3 in the second quarter, and then turn to 0.5 in the third and fourth quarter. This should be quite what we should expect, quite strong growth, but not overboarding.
Ansgar, thank you for sharing your insight with us today. That's all from me for now, but keep clicking back as we bring you plenty more updates and exclusive interviews. Goodbye.